Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to get an update from Hugh Ackrow, the CEO of Revival Gold, because a lot is going on with the company. Hugh, great to see you, and thanks for taking your time, and good morning to Canada.
Yeah, good morning, and thank you for having me back, Jochen. Good to be with you.
Absolutely. Thanks for that. And I must say, development, you are a gold developer. You are on the path to become a miner. So a lot of things happened the last weeks. We will talk about that. But first of all, you are in the development space, of course, and the gold price is rising. For me personally, I think developers are super important because you are the future gold providers for tomorrow, right?
Well, we were talking offline about your forecast on the gold price, and you've been bang on. I can see why you've got such a tan on your face. You've been sitting in the sunlight, enjoying and basking in your success in calling the gold price, which has just been going from strength to strength over the past 12 months here. And I think it's a time to sort of step back and ask ourselves about where all the gold's going to come to feed this demand, because it's awfully difficult to find, let alone develop and construct, and then operate these mines to produce the gold that's being demanded. And that growing gap between the pace of discovery, running at about 10 or 20 million ounces a year, let alone all those other things that are required to produce a bar of gold, and the pace of production is at about 120 million ounces a year is large, and it's growing. And that's where I think investors see the opportunity with developers in good geography with good projects. And that's why we're a buyer, and that's why we're developing these projects we've put together at Revival Gold.
Yeah, absolutely. Before we come to the Ensign merger with Ensign Minerals, it looks to me like that you are, yeah, let's say a little bit different than other companies, because it looks to me like you guys first do strategy and then you execute, right?
Well, listen, we have been very clear about our strategy since the founding of Revival Gold.
Hmm.
Our focus approach is to go where gold has been successfully mined before. And that gives us a couple of advantages. It gives us infrastructure advantages, and it gives us also the advantage of being communities that understand the benefits of responsible exploration and mining. So we look for places where gold has been found before, and that's a proven strategy.
Hmm.
Some great successes. The Gold Strike mine that Barrick grew on, and the Macassa project, Fosterville, Malartic. These are all from brownfield sites, and that's our approach. And the second thing about our approach, though, is that we're going in a phased a way such that we don't have big capital. We develop these projects, we develop concepts for these projects that are phased. That means that our capital is more efficient, which is a more credible path for developing a company like Revival Gold from where we start in our current market cap. Lastly, I want to say that we have been looking at opportunities to continue to build on our founding asset, the Bear Track Garnet Gold Project in Idaho, now some 4.6 million ounces of gold. That's a tough and tall ask because we got to find something that fits our strategy. Brownfield site, something that's got great exploration potential, something in a great location, and something that we think will actually improve on what we already offer for shareholders. And we found that.
Hmm.
Um,
And that is the Ensign Minerals, it sounds like.
Correct. Yeah. So that's the Ensign Minerals, which we announced last month as an acquisition.
Hmm.
It's an all-share acquisition, private company that's done essentially the same thing we did at our Bear Track Garnet Gold Project in Idaho, but they did it in Utah,
Hmm.
ranked number one, just out by the Fraser Institute as the best place for investment in the world. And we've picked this project up. It's about a 6,800 hectare site that's been consolidated over a number of years. 1.6 million ounces of entirely oxide heap leachable gold, which we can march forward on this brownfield site. We've got a paved road into the project. We've got a power line to site. And importantly, very importantly, it's all of that resource is on private land. So that means we can move through the permitting exercise much more quickly than we might otherwise be able to do. And it's a process that we have to go through, but it happens more quickly on private land than it does on federal public land. And the other advantage of this project is that it's in an arid location. So there's not the same amount of baseline data collection that one would have where you've got a lot of groundwater and surface water. So
Hmm.
all of these things are advantages that allow us to move more quickly with heap leach production, and will grow our overall resource and our overall production targets in heap leachable gold in the domestic United States.
Hmm. Okay, super. So that sounds like we have the hub here in the United States, Idaho, Utah. That is all fine for me. And you just described the advantages, which I fully agree. But on the other hand, what I'd like to ask you is we saw the PFS for the Bear Track Arlet project with $109 million pre-production capex. What would it look like for Ensign? Because it looks to me like now you have to build two mines, right? I mean, combined, that looks terrific and fantastic. And I think the numbers, even at those gold prices, they are crazy good, right?
Yeah, so this is an important. I'm glad you've brought this point up. We are not trying to do two things at once.
Hmm.
Actually, what happens is our engineering team rolls over to the Mercur project to advance that to a PEA. We've
Hmm.
already done the PFS on the Bear Track project, so it's in a permitting
Hmm.
preparation stage.
Hmm.
And so the engineering team rolls over to Mercur to take Mercur to a PEA. To get to your other question about potential capex on that project, it's important to say that we're not constrained as we are at Bear Track Arnett, where we've got an existing plant. We can build the plant that's optimal for the resource that we have there, and so I think it's going to be a bigger plant than what we have at Bear Track. We think, based on the current resource, that we're looking at something that might produce 80 to 100,000 ounces of gold per year, which is larger than what we have at Bear Track Arnett. And we also think we can move more quickly with that than we can at Bear Track Arnett.
Hmm.
So that's going to be the focus for our engineering team. And in terms of capital, if we kind of look at some similar operations, heap leach operations in the Western United States, given the type of location we're at and all of the infrastructure, those items of major capital already completed, we don't think we don't think Mercur is going to be a substantial capex. We think it'll be something in the order of 200 million, maybe a bit less than 200 million,
Hmm.
versus Bear Track Arnett, which is just over 100 million.
Hmm.
Uh, Bear Track Arnett benefits from having that existing ADR facility on site, so we save some capex. It's
Hmm.
also a bit smaller. Um, Mercur is going to be a larger project, and we don't have that existing processing plant, but we've got the power, we've got the roads, and so we don't think that the capex on that project is going to be much higher, if at all, than 200 million. We'll have more details on that once we finish the PEA, which is already underway. We haven't yet closed the transaction. We expect to do that very shortly, but we've got the engineering team underway under John Mayer's leadership, and we expect to have the results of that by the end of the first quarter next year.
Hmm. Okay, but still, let's say 200 million there, 100 million there. Your market cap is 70 million. Still quite, let's say, some money to move, I would say, right? So, would you consider with a strategic partner, or how do you want to stem that?
Well, I think our focus will be on the first project in the queue. So that's going to be Mercur, and yes, that'll be a couple $100 million to build. But we're talking about the domestic U.S.
Hmm.
We think there's lots of providers of debt capital against a project like that when the time comes. And you point out that we're at a 70 million market cap. That's a more relevant market cap pro forma of the transaction that
Hmm.
we've just done for institutional investors. And by the way, as part of this transaction, we're welcoming in Sun Valley Gold and Libra as institutional investors, joining U.S. Global, joining Donald Smith,
Hmm.
joining a number of other Conway of Gold 2000, a number of other
Hmm.
very solid institutional gold investors in the company. and we raised $7 million alongside this transaction. So we're funded to continue with the work programs and complete that PEA that I've been talking about for the Mercur gold project.
Okay, so what could be, let's say, an idea for a timeline when Merkur could be in production? Just guessing, I know forward-looking statement, but just to give us a feeling. I mean, the gold price is now starting really to move. We were already yesterday at $2,450,
Yeah.
today at 2,435 or something, which looks fantastic. And I mean, you have done your study with the PFS, I think, is calculating with $1,800. So you have already $600 room, right, for profits, which is great. So
We should wait a little longer. I mean, we've got pro forma this transaction.
yeah.
And it's interesting. I said on the outset, we're buyers, we're not sellers.
Hmm.
We had a couple of different alternatives, going forward here. We could have been sellers, or we could have found a way to part with more of our gold resource, an interest in our gold resource. But we chose instead to be a buyer, and we bought at great value here.
Hmm.
Pro forma this transaction, we're trading at $7 an ounce in the ground
Hmm.
with 6.2 million ounces between these two projects. So when you talk about the gold price going up, and the incremental impact on the value underlying our business, it's huge, and
Hmm.
it's great leverage, and it's in a safe jurisdiction. And it does cause you to wonder, maybe we should just sit and wait for another $600 in the gold price. I think your forecast is much higher than where we are even
Yes.
today.
Yeah.
Um, but look, we to answer your question, we do think we can move more quickly with the Mercur project through to a production situation. At this point, we think this is within 3 years.
Hmm.
Bear Track Arnett will be 3 to 4 years. But we'll see. We'll see where the PEA comes out, and how things look in terms of the pace and the ability to maybe move things more quickly. The financing market will be a huge determiner of how quickly we pursue these projects, because at the end of the day, the gold's not going anywhere, and we want to preserve our capital structure
Hmm.
so that our investors enjoy the benefits of the upside. So we want to do things in a manner that optimizes returns for shareholders, and I think we've set ourselves up very well here in a rising gold price environment. 6.2 million ounces of gold in resource in two projects in the western U.S. With heap leach potential,
Hmm.
and the prospect for 150,000 ounces a year of production and more
Hmm.
as we continue to develop these projects.
Hmm. You said already about some of your large shareholders. I mean, I could also imagine. I mean, if I look at the map, for example, both future mines are only like a 6 hour drive from each other away. So, in your neighborhood are some of or the largest gold companies in the world. It's getting more and more, yeah, tough to do exploration. It takes very, very long. Aren't you in fear that you will be taken over?
Yeah, listen, we've always chosen that good geography for those reasons you've
Mm-hmm.
articulated. A lot of our bigger peers are in the Western U.S. for good reason, but we can't be looking in the rearview mirror. We've got to move forward and continue to progress these projects, and I think if we do that, we'll build value for our investors, and that will come to fruition. Whether it's a takeover, or whether it's a return of free cash flow from production to our investors. We'll work to optimize that as we go here. There's no question we're seeing a lot more appetite on the part of the
Mm-hmm.
senior and intermediate gold companies. There's, we got some great examples of how that high gold price is actually getting to investors. Newmont put out something like $1.4 billion of operating cash flow before
Mm-hmm.
working capital adjustments in the last quarter. Kinross came out with an EPS for the quarter that was 50% higher than expectations. And I think we're going to see more and more of that. There's a, as I like to say, a quiet bull run in the gold equities. I think the rest of the world's going to wake up here, and we'll be rewarded for that, and for our diligence in putting these good projects together currently trading at $7 an ounce in the ground with a ton of upside from there.
Absolutely. Yeah, I think it will be quite obvious then after the second quarter this year, because my feeling is the average gold price will be above 2,300 US dollars per ounce. And that would be, yeah, a major difference to the first quarter, easily 250, $300 higher than what we saw. And then you will see it in the results, and that will, yeah, give a ton of cash for those companies. So for them, it's much easier to acquire good companies than to do it by themselves because it goes much faster,
Exactly.
right?
Yeah, exactly. We're
Absolutely.
doing the heavy lifting now.
Yeah.
It's always a 12-year overnight success when you're building a new venture.
Hmm.
And we've got a lot of patient investors who've been alongside for the ride here,
Hmm.
but we've built a great company with great assets, solid team. Our CFO Lisa Ross. I mentioned our VP Engineering and Development John Meyer, our
Hmm.
VP Exploration, Steve Priestmeyer, Chief Geologist, Dan Pace. These guys are doing a wonderful job on super assets, and our investors will benefit from that rising gold price environment and the scarcity of projects like the ones that we've been progressing.
Yeah, definitely. And last question, your large or major shareholders, they think the same way? Because, I mean, tomorrow could somebody come and says, hey, we start the bidding with 60 cents and then maybe 70 or 80 cents. I think that's absolutely still undervalued for you. I mean, I personally have a target of 150 to $2 for your stock.
Yeah, that's where the analysts are at as well.
Mm,
So look, we're in no rush to sell. We have crossed that Rubicon in the past
mhm,
on scenarios where we could have joint ventured or parted with streams or royalties or done transactions that
mhm,
would not leave our shareholders with the kind of interest that they currently enjoy in these projects. And I think our shareholders have stood with us on that. And you've got to have some patience, and I'll fully admit that it's painful at times watching the gold price move and the equities just
yeah,
sort of track along. But we're creating value in the ground, and we're surfacing it with every step. And this
mhm,
most recent step, the acquisition of Ensign Minerals, the related financing, is a huge win-win, operationally synergistic,
mhm,
builds out our portfolio for a larger play, makes us the third largest
mhm.
portfolio of Western development assets in the U.S. It's a significant step forward.
Absolutely. Super. Hugh, we keep fingers crossed. Please keep us updated. I would say you have laid a fantastic foundation, and that merger makes absolutely sense to me. And yeah, let's see the next steps and what's going on. I mean, one thing is for clear, gold will go higher. That helps everybody.
Thank you,
Super.
Jochen.
Thank you very much. All the best. Thank you, Hugh. Yeah,
Cheers.
ladies and gentlemen, that was Hugh Agro from Revival Gold, the CEO, and you heard it. They will merge with Ensign Minerals, and I think the combination here of Idaho and Utah with both heap leach projects, possible underground scenario, this is a fantastic thing, and they understand what they are doing. They have a great strategy here, always had, and they go very, very focused onto those deals here. And I think in 3 to 4 years, there's absolutely possible gold production from both projects. The capex is not that high. This is really makeable. And the stock is way too cheap. Really have a look at Revival Gold. Thanks for watching us, and bye bye from Switzerland.